I mean, okay, the bad news, markets are falling, startup valuations are dropping, interest rates are rising, and so is the cost of living. So are you still bullish on tech?
I couldn't be more bullish on tech. And the reason is you just laid out a bunch of problems. Innovation solves problems. It becomes more important during these times. And if the globe is in a recession or going into a recession, in the case of many people think in the US, we're going to have that many more problems to solve. And the earnings and revenue growth rate of problem solvers far outshine the economies.
According to estimates from the Congressional Budget Office, the ongoing quantitative tightening by the Federal Reserve could continue for another 3 years. In a recent episode of the All In podcast, Canadian-American venture capitalist Chamath Palihapitiya shares similar views. The billionaire investor believes the Fed is on a path to overcorrecting and breaking the markets. After a fourth consecutive 0.75% interest rate hike, the markets are preparing for a Fed pivot sometime in 2023. But Palihapitiya says the U.S. central bank could keep raising rates until 2025. Though we are less than a year into the Fed's aggressive rate hike campaign, there are already signs of trouble in the markets in and outside the United States. If this is to continue for another 3 years, investors must prepare for a massive bloodbath that could significantly bring down many asset classes. While speaking at an annual tech conference recently, ARK Invest founder and chief executive officer Cathie Wood discusses the importance of innovation as investors gear up for more uncertain times ahead. During her discussion, Wood explains that she believes the United States economy is already in recession, despite the official narrative that the economy is strong. Wood also discusses her team's research on disruptive innovation stocks, including blockchain technology, and what they would mean for investors within the next 5 years. We will now take to Cathie Wood's Web Summit interview. But before then, please take a little time to hit the like button, subscribe to the channel, and turn on post notifications for more crypto-related videos. Also, ensure you drop your comments and observations in the comments section below and check out our other crypto-related videos. Thanks, and enjoy the video.
ARK does one thing. We don't pretend to be an asset allocator. Our clients are the asset allocators. And our clients decide for their clients how much risk can this client tolerate. So we focus exclusively on disruptive innovation, research, and investing, nothing much. We're not distracted by anything. So it's really up to asset allocators and to individuals also to assess their risk tolerance. The great thing about young people and today is they are cutting their teeth on cryptocurrencies, crypto assets, which are extremely volatile, much like our funds are. They understand if you keep your eye on the prize, you're going to win.
But the question is, how much time is that going to take?
What's fascinating about young people today is many of them are natively digital, natively interested in technology, and understand that technology does solve problems and make our lives better.
But do they understand the risk?
I think they certainly do after the last year and a half. But even before that, as we were going into COVID, in a 1-month period, we were down 46%. If you look at ARK's entire lifespan, its fund span, roughly 8 years now, you'll see that there have been risk-on, risk-off periods. And our client base, our asset retention has been phenomenal because our clients know that you average down into periods like this. And they also know and are learning as they study the various benchmarks and indexes out there that they don't have the kind of disruptive innovation that our funds do. We are a great diversifier. We think most individuals and institutions are short truly disruptive innovation and that we can help diversify them.
Now, why are you so sure about this? Based on what?
Based on what? The last 20 years, 22 years, have been characterized increasingly by a shift towards passive investing and benchmark-sensitive investing. Why is that? It is because of the tech and telecom bust, and then again, 08, 09. And many people saw these benchmarks, the passive indexes, doing better than investors who actively manage their portfolios. Well, this was part of a self-fulfilling prophecy. If you have the pendulum swinging towards these benchmarks and towards passive, they probably will outperform. But if we are right, and for the first time in history, we have 5 innovation platforms, 14 technologies, the seeds of which were planted more than 20 years ago, all ready for prime time now, all ready for exponential growth opportunities. What that means is the traditional world order is going to be disrupted. How? These 5 innovation platforms, they are going to impact every sector, every industry, sub-industry company.
According to the firm's official website, ARK Invest aims to provide broad exposure to disruptive innovation centered around artificial intelligence, robotics, energy storage, DNA sequencing, and blockchain technology. The team believes these 5 innovations will change how the world works and generate over $50 trillion in business value and wealth creation over the next 10 to 15 years. Wood explains that there is synergy between these innovation platforms and the technologies under each, which would help them quickly overhaul the current world order and greatly reward investors. The renowned hedge fund manager is almost 100% certain of the direction of these technologies, and here is why.
So we use our research. The screen for our portfolios is not a backwards-looking index. That would defeat the purpose of investing in the future, right? The screen is our research, and we give it away so that our clients and others can understand why we're investing in these technologies, why we think they're so important, and why they should get on the right side of change. This is part of our mantra. Many people think they are exposed to our kinds of strategies, the disruptive innovation with NASDAQ 100, for example. They are not. If you look into that index, which you find FANGs, NVIDIA, good company, Tesla, we own the last 2, but we have not owned the FANGs for quite some time in our flagship strategy. And if you look down below in the other 50% of that portfolio, you'll find food stocks, you'll find brick and mortar retail, you'll find utilities, you'll find energy.
But that's to make things safer in the long run, to diminish the risk usually.
You know what? If people want innovation, they should invest. Someone should provide them with innovation and not a hedge. Their advisors can hedge, or they themselves can hedge. You can hedge with cash as well. Well, if you think about innovation that's going to disturb the traditional world order, who are the big banking clients of these banks, right? The traditional world order. They give them a lot of business. And these littler companies, smaller companies, are nipping at their heels, and they're basically dismissing them. And so we are the only company, I think, doing the depth of research on truly disruptive innovation out there. And we are also doing something else that traditional research firms do not do anymore. They used to when I started in the business. We are focused on a 5-year investment time horizon for our public portfolios, and now for our public-private crossover fund, longer still. This is what's missing in this market, this very short-term behavior that has forced management teams into basically catering to short-term desires like buying back shares, paying dividends, instead of investing in innovation. I do believe that during the past 20 years, we have been through the most massive misallocation of capital in history.
Cathie Wood had the undivided attention of the investment world in 2020 and early 2021. From its lows in March 2020, her flagship ARK Innovation ETF jumped by over 300%, hitting an all-time high of $152.61 in February 2021. The rally was fueled by the favorable macro environment and strong investor sentiment towards some of her picks, including Zoom and Teladoc. The same fund is now down by over 75% in 2022, and Wood's reign seems to be fading. However, if she can pull off another brilliant performance once market conditions improve, her glory days will easily return. Are you long or short innovations stocks within the next 5 to 10 years? Do you think things will advance as quickly as Cathie Wood says, or will the timeline be longer? Please let us know what you think by dropping your comments and observations in the comments section below. Also, ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Thanks for watching.